Mark, how are you?
Very well, thank you. It's a little bit windy and wet in the UK as per. We've got a bit of a storm, but other than that, markets are still open, which is good.
Yeah, the year's not end yet, so we got
No,
the today, tomorrow, before Christmas and holidays, and the quiet in the market. But Mark, first, welcome traders, welcome everybody. Happy to see you all from all those countries. Really amazing to have you here, and of course, for the second time, I believe we got Mark here with a webinar, especially for closing the year and preparing us for the next trading year. So, Mark, happy to have you again. We met in June earlier this week and previous webinar and today. And traders, you have no idea, if I was about to start trading today, probably one of the guys I would try to learn from is Mark. So it's really is one of those traders you wanna learn from. So Mark, thanks for being with us. You can take it from here if you want to introduce yourself. Anything
brilliant.
that I missed or whatever it is, and I will just be in the background if in case anything is needed.
All right. Well, thank you, Sol, and very kind of you to say that. Whether I deserve that or not, I don't know, but I do try and help. I'll quickly introduce myself. Mark Holstead. I've been trading since 2001. I don't claim to have all the answers. The markets have been kind to me, but I like to share what's worked with me, but also working with other traders as well. I kind of get a good idea of some of the sort of attributes of traders who make it work. And by the way, I have a podcast, and Sol, none other than Sol himself, was on it the other day, and he shared some of the attributes of successful traders there. So if you really want to dig down into stuff, then you can go and listen to that one. That was a great episode. Okay, I will share my screen, Sol, and we will get started. And thank you, by the way, ladies and gents, for turning up today. As Sol says, everyone's kind of winding down, but you're not. You're here, and this is separation season. This is the time when you can put the throttle down, you can do some work on your trading. Maybe not trading as such, but it's a time when you can do some learning, increase your knowledge, look at your existing trades, do the sort of homework that helps you grow your business so you've got that momentum going into 2024. So yeah, well done to anyone who's on this. And if you're on the recording, good for you as well. Okay, so let me share.
Yeah. Meanwhile, guys, we're gonna use the chat just for discussions and chatting. Just make sure you're typing for everyone and not only host and panelists. You have like settings there. And if you got questions, use the Q&A section.
Move forward in your trading, whether you're a day trader, whether you're a swing trader, whether you are currently funded with the 5ers, or whether you're trying to get funding, whether you're spinning your wheels, whatever level you're at, I feel there's going to be something that's useful to you today. So stick with me, and at the end, I'll leave plenty of time for Q&A, and I'll make sure that I get to all those questions. So if you want to put a question in, put in the Q&A, as Sol said, and I'll get to it at the end. Okay, so today's trading success blueprint: 5 habits of effective traders. I want to condense this right down and just give you 5 attributes that I see from successful traders. Before we get into that, there's a great quote here from Linda Raschke, who is a trader who I follow for many, many years, a couple of decades now. I think is an excellent trader. She's got some great material out there. The markets are a personal journey, and every person is unique. What works for one person may not work for another because of their personality, trading style, and level of skill. So this is the challenge you have when you're trying to just replicate someone's strategy, right? So we take all these strategies and ideas in and thoughts and ways to approach the market. We have to mold that to ourselves. And what we can do, there's something we can model, is the habits that all different traders have who are successful or effective. So whether they're a day trader, they're a scalper, they're a swing trader, they're trading currencies, they're trading indices, they're trading gold, crude, whatever it is, we can kind of take some of the attributes of those and go, right, let me mold those into my own, or fold those into my own trading, and then develop an operational strategy that suits me as well. Okay, so what's our objective today? Oh, by the way, did I introduce myself properly? I'm not sure if I did. Mark Holstead. I've been trading since 2001. You might have seen me on YouTube. I've got a few videos on YouTube, and also run community traders called Traders Mastermind. You can check that out, tradersmastermind.com. There's a podcast there, free daily email, all that other good stuff. Let's get straight into it. So what's our objective today? Let's identify the traits of winning traders, the common themes. And not only that, I'm going to construct some action points that you can take away and implement in your own trading. We want to copy what works. We don't want to reinvent the wheel. We want to be Google, not Yahoo. And the reason I say this is if you know the search, when the search engines all came out, Google wasn't the first. Yahoo wasn't even the first, actually. It was no, before that. But Google came along and went, what's working? What can I model from what's working and make it my own? And now they're worth, what are they? What's the market cap of Google now? 1.7 trillion or something. So, it's an example of, hey, we don't need to reinvent the wheel. There's no need to play the game on hard mode. Let's look at what's working. Let's take what's working from others, some of the themes, and make sure that we stick to that whilst we build our own strategy and our own approach in the market. It's very important to be it's a personal journey in trading. We're all different. We all look at things differently. So we all ultimately should have a strategy that's personal to us, but we can take and fold in all these other things that are super effective. Okay, so the first thing is simplicity. So almost all, and I've got to be careful when I say all successful traders, because there's going to be some people out there who are running really extreme, really complicated quantitative algorithms and all this type of stuff. But the majority of discretionary traders, successful discretionary traders, keep things simple. I don't know. I've never come across a trader who's been doing exceptionally well who has had a very complicated strategy. Right? They might change and chop and change depending on the market conditions. Fine, that makes perfect sense. You've got a runaway train bull market. You're not going to start trading mean reversion or trying to trade exhaustions to highs. You're going to kind of align with the trend. Same if the market's choppy and rotational, you're not going to start buying breakouts. So of course they'll adapt and adjust, but they keep things simple, and they tend to specialize in one or two things only. They remove the ego and they become experts in a small zone. Before I give you a little analogy that I like to kind of think about, on this little screenshot here is a kind of calendar print of a trader I've been mentoring for a few years now. He started trading just after COVID, and this guy has done exceptionally well. He started out struggling, and now he's almost, not quite this year. I think he's closed the books at nearly six-figure profit. For some of you, fine, six figures profit. Like, oh, that's nothing. But for someone who's come from from just learning to trade and struggling. But the point is, not why I'm telling you this, is because he trades one market, one direction, and he trades very infrequently. He's day trade, if not a scalper almost. I'm trying to get him to hold trades longer, trying to get him to size up on stuff, but that's by the by. But the point is, look how often this man trades. This man trades, and he's a day trader too, or you can even get a scalper infrequently, 3 times in July, 4 times in June, 3 times in December. I'm pretty sure he's closed the books for this year. Maybe he's got a couple of more days to go, but I think he's probably done. But the point is, it's simple. One strategy, one style. He trades long only, NASDAQ. And I see this across the board. And, when I think back on my trading career, the times when I've really kind of put the throttle down and done well, and when I've just been super, super focused on one small thing. And just the opportunities there, your mindset's in the right place, the market conditions are right. It's great. Now imagine you're in this swimming pool, right? You're in this big swimming pool. And imagine that's the market, all the markets. And you've got over there, you've got at the deep end, you've got Goldman running around, like a shark. You've got JP Morgan, you've got the HFT guys over there, and this and the other. And it's a massive pool. And if you go start swimming in that end, you start trying to compete with those guys, you are going to get munched up. But we don't need to. We can just go in the corner, fine, and take a little slither and go, I'll just become an expert at this part of the pool. And it's super deep. It's deep enough for me to trade enough size and there's more than enough opportunity there. But I don't need to start trading other things. I don't need to go in their lane. You can focus in your lane. So what does it mean when I talk about this? So the specialism of and the simplicity of just focusing on one thing. Maybe it's exhaustion trades. Maybe you only look for some sort of exhaustion, and you're very, very good at spotting the exhaustion. When the exhaustion comes, you know what you're going to do, you know where your stop is, you know how you're going to come out, and you become an expert at exhaustion. Maybe it's a momentum play, like example here, a 5 minute chart of USD JPY. Maybe you're kind of setting flags and pullbacks. Maybe that's your thing. So you have a filter that identifies momentum on the markets that you trade, and then you've got setups and strategies you deploy. You don't play any other game, but you become very, very focused. And maybe it's something like a mean reversion strategy. You find a market that's sitting in a range bound environment like Euro USD here, and you ping pong back and forth and you trade that way. And actually, in the podcast where I did with Sol the other day, I asked him, "Hey, what's your favorite strategy?" And he shared something very similar to this. Like, I really like this. And it was very specific and it was very simple. And he gave the rules and how he traded it. And that's become his specialty. And so this is really such a key point for traders, is to just become simple specialist. Okay, and if we see this from other traders, one more story. A guy I used to trade with, this was from very, very early days, 2003, 4, 5. He would only trade one stock on the London Stock Exchange, one stock. And he was so good at trading that stock, and he would trade it with size. And he would just have his limit orders in, he'd get filled on it, and it was just this. I just thought it's almost a magician. But the fact that he just devoted his attention just to that one thing was what made him successful. And I learned from him and went, okay, well, actually, I'm going to really kind of focus my attention. First edge for me that worked very well was working on the mining shares, and this is a long, long time ago, but just focusing my energy on one thing. And I've taken that through my trading kind of up till now when I'm trying to focus on one thing. I'm not getting bogged down by noise. And so it's something that really is important to do. So action points here. I don't know why that image has come. My assistant's put that image in. I guess he's elevator pitch. He's gone, right, that's your elevator pitch. Yes. Okay, so define your strategy right now. Your strategy, what is it? Define it. Okay, now think of ways you can simplify. Is it too complicated? Are you looking at all the indicators you don't need to? Are you checking MACD? Are you checking Bollinger Bands? Are you checking higher time frame? Are you checking correlated instruments? Do you need to be doing that? Can you not just have a very simple rule that says, if the market does this, it's a filter for me to get involved in it, and this is my trigger, a break of a high, a pullback to a low, a pin bar support, whatever it might be. How can you simplify your trade? Because being simple, but simplifying what you're doing allows you to become a specialist. And that's exactly what you want to be. Where do you need to focus? Okay, take layers away. You can always add stuff later. Just focus on one simple process. Buying pullbacks to support an uptrend. There you go. That would be your elevator pitch. Come up with an elevator pitch. Something very simple. I buy pullbacks and uptrend. I asked the trader the other day in our traders mastermind community. It wasn't the other day, so about 3 or 4 weeks ago. What's your edge? I'm very good at identifying where other people's stops are. Done. So he focuses exclusively on where other people's stops and how can I take advantage of those. The liquidity vacuum to get little pullbacks and wicks and all this type of stuff. That's what he specialized in. So what small area of the market do you want to be a specialist in? Simplifying things. Honestly, it's such a shortcut to getting to where you need to be. All right. Number 2, patience. There is no successful trader out there. You know this, right? You know this. There's no successful trader out there that doesn't have patience. And actually, on my desk is reminiscence of a stock operator, well-used copy. But just, I recommend if you haven't read it, many of you have. But even traders in the 1930s were saying, sit on our hands, be patient. Overtrading kills any edge you may have. And I'm going to say it again because it's so important. Overtrading kills any edge you may have. You will not get to where you want to be if you overtrade. And sometimes you have to look yourself in the mirror and go, man, I'm just not operating as I should be. I need to be more patient. Every time you take a trade that goes against your rules, you've got negative expectancy, most likely, and it damages your confidence. And the patience goes for holding trades. Every time you snatch at that trade. So the simplicity and then the patience to let the trade play out. Let the market pay you for being right. Now, of course, if you're a super active scalper, fine. But even then, you're being patient for the right opportunities. You're not scalping all day long aggressively. I doubt you have enough edge there. Maybe you're scalping aggressively at the open, or as it comes to a key level, or around a certain gap fill point, or whatever it might be, a pivot point, whatever it is. You're finding a zone to really laser focus on, and you're trading there and you're waiting. So just like a sniper waits and just start cracking off rounds left, right, and center, right? He waits, he's patient, and he pulls the trigger. And then he waits again. And he's in the trade. And he lets the trade mature. He waits for the target. He waits for a reversal signal, whatever he's got in his plan. And then he comes out the trade. And you have to develop this patience. And it's a common trait I see from so many traders. Now, that's not to say that big successful traders don't now and then become impatient. We're human beings, right? I'm not here to say you've got to be a robot. And I'm far from a robot. And I know many traders who are doing very, very well who aren't robotic either. They make mistakes. They're human beings. But on the whole, if you can, on the whole, have patience, then it's going to serve you. So you don't have to be perfect. You just have to be better than you are now. Just improve that little bit each day. Okay, so action plans here. Actual fact, there's a little thing in my desk. I've got my reminiscence of stock operator still here. And I've got this timer, right? Go on the camera there. Yeah, I've got this timer, right? So this timer is so handy. Amazon, whatever it is, £5 or something. And don't use your phone because you don't want to be distracted by stuff on your phone. That's why I've got a separate timer. So how do you use a timer? This helps you just wait a little bit. It helps you, that little internal voice you have, right? We're all in a trade. Let's say, use the example, I'm in a trade. You're just kind of coming to a target and you've got the urge to close it. And the little voice, we call it the chimp. If you read the chimp paradox, that's where it comes from, is saying, you're going to lose out on unrealized P&L, aren't you? That's a good trade there. You want to take that now. Look at that unrealized P&L. It's starting to pull back. Don't you think it's reversing? You should be in it. No, you've got to get out of it. And you just have to go, shut up. I'm holding this until my target. And he's like, well, when we reach your target, but like, you have this little internal dialogue, right? We all have it as traders. So one way to combat that, and I said it's going to be tactical today, timer. Get a timer. Say, I'm holding it for at least 5 more minutes or 3 minutes, whatever time frame you trade on. Maybe it's 15 minutes. You turn your timer, you press the button, and it sits there, and you do not do a thing. And this helps you sit with your thoughts that want you to close a trade, but all you got to do is hold out for another 5 minutes. And you probably know that just holding on to a trade for a little bit longer, letting it run, letting that thing run a little bit more is going to serve you. Now, of course, there are some strategies that A to B trades, level to level, fine. Cash flow that trade, no problem. But you know there's some trades that need to be held. And so you've got to stretch that muscle, get out of your comfort zone a bit and be able to be patient. So a timer is so, so key. Same with entries as well to a certain extent. Sometimes you're like, if you have a trade where you often take the trade too early, get stopped in the second bite of the cherry gets you the profit, you need to try and eliminate that first one. And that might be a case of just give me another 5 minutes, another 5 minutes, just wait. Just give yourself, just pause things, just, reduce the impulsive nature of your trading and kind of be a little bit more careful and considered about how you do your business. Okay. Another thing is to kind of walk away. Fine, leave the screens, be patient, wait for the market to have the conditions that you want, or wait for the market to get to the level that you want to do business at. Set your alerts, be smart about it. Work on other aspects of trading. So, something I really, really recommend this. If you're struggling to have patience and you're struggling to walk away, you're struggling to wait for the trade, you're an overtrader. And first part of being an overtrader is to say, yeah, I overtrade, I need to fix this. Once you admit that, you go, okay, what's the solution? So one thing you can do is pen and paper, write down 5 things that are important to you in trading. In other words, what do I want? What are things I want to do? Do I want to read a book? Right? Do I want to watch a course? Do I want to go through my old trades? Do I want to analyze this market? There's something, sort of homework, if you like, that helps build your trading business other than the click, click, click of trading. And what happens then is when you sort of in the market and you say, listen, it's not my market. I'm waiting for this level to be breached before I get involved. I want to be patient. I don't want to overtrade. I don't want to ruin any edge I may have. Okay, it's time to do homework. It's time to work on the other side of the business. And I'm going to read 10 pages of this book. I'm going to watch this course. I'm going to review my journal. I'm going to look at the daily chart. I'm going to look at all the Fed announcements, how they reacted, how they impacted my market. Whatever it is, there's always something you can be doing. And what this does is A, it stops you over trading, and B, it helps you do the things that other traders aren't doing. Not a lot of traders are doing that homework. Not a lot of traders are putting their time into, building themselves up rather than just a click, click, click of trading. So being more professional. So when you are approaching your trading, like it's 2 sides of the business. One is making the money in the trades, trying to get better at trading, and the other is increasing your knowledge, increasing your ability to scan the markets, increasing the stuff that needs to be done as well. So really, really important that. Okay, so and one thing to mention here is that I'm not sure if I mentioned it. I'll mention it later on, but I will mention it now. Is that most traders who struggle, imagine a pie chart of the time you spend in trading. Most traders are 99% execution in the markets, right? 1% studying, right? That's probably not you, to be fair, because you're here watching this webinar. But you want to move the pie chart around so that you're spending more time learning, improving your knowledge, like on this webinar, more time analyzing your previous trades, so looking at your journal, more time kind of analyzing the market conditions, looking at markets, marking up your charts. That should eat up more time with the pie chart than the actual trading. And the more you can kind of swing that pendulum around, the better you'll get. And that's another trait of traders that I see that do spend a lot of time kind of studying conditions. Okay, so number 3, work ethic. Now listen, if you're trading because you think it's fun, that's cool. It should be fun, but there's a lot of work as well. We love trading, right? You love trading. I love trading, but I love the process, the business. I love the whole thing, and I love putting the work in. And if you can align your worth as a trader to the work you put in, then that's really going to help you. So it's research, it's analysis, it's a trade review, it's personal development, like your discipline, doing health things for your health. This kind of sounds a little bit like, well, it's just a strategy. It's not a strategy, but this is the sort of thing that will help you move forward regardless of the strategy you deploy. So taking time to research, taking time to do analysis, and just upping your work ethic a little bit. Now, I want to be careful here because sometimes it sounds like you're saying you must do this, this, and this. You must be journaling for an hour. You must be doing this, this, and this. And that's not the case. That's not the case. When you look at successful traders, there's a real variety of people out there. Some people journal for 3 minutes. Some people are collecting loads of data and they love doing that. You've got to find what works for you. Well, you can't get to a situation where you're like, oh, yeah, but, I watched a video one time and I read an article that said, I should be journaling for, 50 minutes each day and I should be doing. If you don't need to do that, don't do that. Just start by doing 5 minutes. That's when the time can come in. If you're procrastinating about doing a journal, or you're procrastinating about doing your analysis or your trade review or your research or your reading, just use a timer again and go, God damn it, just get there and do something for 5 minutes. Bang, timer goes on. When you start momentum, you probably won't stop at 5 minutes. It's just starting that momentum, right? And knowing what's going to move the needle for you in trading. Do you need to do more research on the market you trade? And by the way, at the end when the market's closed, and I know if you're trading Forex, there's not many times that is closed, but assume there's a time when you kind of shut the books down for the day and go, right, I'm done, whatever happens. There's a certain relaxing element that comes with when you lift the burden of performance off your shoulders. When you're not trading, you're done for the day, you've closed down the broker platform, and you've got a chart printed out or whatever it is, and you're sitting there with a nice cup of coffee, whatever, and you're saying, right, I just need to look at this market. I just need to analyze this market from your perspective of, I'm not trading it now. I just want to see what happened. Do I miss something in the day? And just by spending time doing these little things, there's such a needle mover that they really, really help your performance. And doing this in little different areas as well is so, so important. So successful traders absolutely have a really high work ethic. It doesn't mean they're just going crazy about stuff, but they do things that are important. They know they need to be doing. So, mouse is all over the shop here. Another great little image for you. Action plan. Do you have the time? Make time. If you need to take time away from clicking the mouse to do things, then do it. And what I mean by that is that pie chart. If you've only got a few hours a day to trade, then trade for one and grow your trading business, the homework and the other. That's where the ROI comes from. That really, really moves the needle. Trading fine, you need the experience, you need the screen time, you need to look at the price action, you need all that kind of stuff. It's very important. Absolutely it is. But so is doing the stuff that no one else is doing. Because if you do the stuff that other people aren't doing, you'll get the results that they don't get. And we all know the statistics with retail traders. So very important to do that. Let me make sure. Okay, there we go. So, second part of the action is to do this. I think I've covered this, so we can skip through this. Allocate a small amount of time to each task. Research, start at 15 minutes or 5. Analysis, 15 minutes or 5. Review, 15 minutes or 5. Make them a habit, then decide to shift that pie chart that we talked about. I thought I had a slide on this. Perhaps the review time needs more time than analysis, right? That should be done. You just work out. And by the way, when I was research, I mean, okay, are you going to look at strategies? Are you going to do some courses? Are you going to, read some books and stuff? Analysis is looking at the chart in front of you or looking at the chart that's gone by. Let me look at yesterday's price action. Look at price action over Fed, over CPI. What happens at the end of the month? What happens at the open if I'm trading indices? What happens on Fed day? What happens on oil inventories day? Whatever it is, that should be useful to you. You want to become an expert. Going back to the first point, simplicity, you become an expert. So just knowing that like the back of your hand is so, so important. And review is the trades that you've done, because the trades that you've done are actual fact. It's not hindsight. It's not hypothetical. It's actual stuff you've done. And reviewing your trades is super important. Okay. So the other thing as well, I wanted to add this. Some people are like, oh, but I think you're here. You want more. You're ambitious. You are driven. You want to succeed. You've probably got some pretty hefty goals. Am I right? If that's the case, you have to become a different character. You have to think like the trader you're becoming. You have to think differently. And a lot of traders, work on personal development. They push themselves out of their comfort zone. They make sure that they're uncomfortable to get, as Steve Ward says, great trading psychologist, by the way, check out some of his books, get comfortable with being uncomfortable. Dial in your diet, make sure you're doing the gym, cold exposure, saunas, make sure you're surrounding yourself with winners, not losers, winners, people who want you to win and you want them to win. And when you're going up, you're lifting that. Well, they're up and you're down, they're lifting you up. That's how you get better. You dial everything in. You take this super seriously because all this stuff hardens you for the market knocks. When you're there and you're trying to kind of get yourself dialed in, you're trying to put on some muscle, you're trying to lose some fat. It's a bit tough, right? You're trying to do it, but you know that this is the sort of mindset you need so that when you're in the heat of the moment, when you've got a big size position on the market, just pulling back and your unrealized P&L is going, and you're like, no, I'm happy to hold this. That resilience and discipline and fortitude that you've built will now come into its own. So diet, gym, examples here. You don't have to do all of these, of course, but just upskilling yourself everywhere because that will absolutely have a knock-on effect to your trading. I promise you that. And you can't make many promises in trading, that's for sure. But that's one that I think you'll benefit from. Okay. So how with time? Okay, we're doing good. Emotionally aware. This is maybe an unusual one, but listen, we know trading is about emotions. It's about psychology. The setups and strategies are one thing. We can go and we can talk about, pullbacks and moving averages, fake outs, flushes, range break fake type trades, opening drive, opening range breakouts, all this type of stuff, right? Fine. You've probably got your own stuff you're exploring. You're probably playing around with different strategies and stuff. But one thing that will help you more than anything, and one thing that absolutely all traders I see who are doing very well, they're very emotionally aware. They understand that A, they're human, B, they experience emotion, but how they deal with that emotion is key. Successful traders know what triggers them. And what I mean by this is, do you have something that makes you frustrated or angry or just want to trade on tilt? I know for me, if I have a string of losers, like 2 or 3 losers in a row, it just annoys me. I can't help it. And I've been trading 20 plus years. I'm a human being, right? I do not like to lose. I know I'm fine with losing. For some reason, if I have that in a row, I have to be careful. I'm very emotionally aware that could, it hasn't for a long time, let's touch some wood here, but it could trigger me into doing something I don't want to do. It could make me a revenge trade. It could make me size up. It could do these things that we've all done at some point. But being emotionally aware of what triggers you is so, so important. Maybe for you, that's a run of success. A lot of people, this is an interesting one. I see this with a lot of people, is when your equity curve is stagnating. So let's say you've had a good run and you've seen it kind of grow and grow and grow and grow, and it's stagnating. So example, let's say you're trying to qualify for 5ers funding. Okay, you're nearly at the target and it's just sitting below that. And you can feel that frustration boiling. I'm nearly there. I'm not, and it's almost there. But no. This is where you go, okay, hang on, this is triggering me. Knowing what triggers you allows you to step back, let that emotion dissipate. I do not want to trade emotionally, and nobody trades well emotionally. Everyone knows that. Now, you're a human being. You're going to make mistakes. You're going to make the odd trade that you think, I shouldn't have done that. That's okay. We're not here to be perfect. It's impossible to be perfect. But we're here to do things right the majority of the time. So trade in a way that avoids the things that trigger you. Choppy markets used to be a nemesis for me. I would just get so stupidly get frustrated, trying to guess it, chop, and it just chop it out, and then you'd lose money. Like, oh, what a waste! It really annoyed me. So I just avoid chopping markets. Maybe for you, it's if a trend's ripping off the upside and you're not on it, maybe that annoys you. There's something that triggers you and annoys you. So avoid it, keep out of it, because going back to one of the earlier slides, you'll have a negative expectancy. If you trade from an emotional perspective, you'll have a negative expectancy. So understand the signs that emotion is driving trading decisions. Oh, I must get on that move. Or, oh, I've been stopped out 4 times trying to get in this breakout. I need to get a 5th because I feel like I'm pot committed now. Or, and it comes down to allocating some time to sit down with your timer and say, right, what really annoys me? Let me write down what really annoys me. And then how do I avoid getting into that? Do I need to pull myself out of the market after 2 losers in a row very quickly? Do I need to structure my risk allocation for the day into 2, morning, evening? Do I need to not trade that pair? Because that pair I've got some sort of vendetta against that damn pair, whatever it is. And we're human beings. It's okay. And the beautiful thing about trading is we don't have to stick to one thing. We can adjust, we can adapt, we can bob, we can weave. If scalping a couple of trades annoys you, then maybe prolong your time frame a little bit. If trading, in a range bound environment you don't like, then don't trade in a range bound environment. Get a filter like an ADX, or a moving average, kind of a distance from moving average, or slope of a moving average, or something. There's ways to avoid the conditions that trigger you, and it's just putting those together and spending some time knowing you as a trader, who you are as a trader. And imagine this: if you were employing traders, one of the things you would do is you would work out their strengths and their weaknesses. So if I was employing you, if you were employing me, I'd say, hey, listen, let's look at your performance. Let me see what you're good at, what you're not so good at. And I wouldn't beat you up about what you're not so good at. Perhaps would go, all right, can we get better at it? But I'd say, okay, listen, let's avoid that. Let me try and play to your strengths. Let me give you more capital. Let me push you towards that. That's how you would do. That's how you would get better at trading. And in a way, social media, I say this from someone who's, been active on YouTube for a long period of time. I have 370 odd thousand subscribers. So a lot of views and a lot of kind of, I think valuable videos. They're not all valuable, actually. The other one's not been that great, but I think on the whole, generally valuable. But you've got to be a little bit careful in that you're trying to do everything perfectly. And just say you don't have to be perfect. Again, going back to the analogy of that little kind of place in the pool, that's all you need. And then you can just become an expert there. So being emotionally aware. Okay, action plans for this. I've kind of covered this. What makes your emotions heightened in the markets? String of losers, missing a fill, stopped out, missing a fill used to really annoy me. If I was in a limit and I'd come to it and it just wouldn't take it, that used to frustrate me. Obviously, it doesn't matter if you're using market orders. It's being stopped to annoy you. Put a plan in place to avoid those situations if you can. If you can't, practice your response. Have I got time to cover? I've got time. This is a really key tool for you. So you want to when I say I practice your response, let's use the analogy that after three losers, let's say it's a good one. Weekend, you've done all your analysis and homework. Monday morning comes, right, ready to trade. Let's go. Broker platform goes on. You're like, right, I've logged in. Ding. Oh, stopped. See something? Ding. Oh, stopped. Ding. That's annoying, right? That's annoying. Shouldn't be doing that anyway. But let's imagine you've done this. A plan that you put in place would be, hey, don't dive in on Monday. Let me get calibrated conditions first. Very simple, right? That's a very easy way to do it. Now, let's say you only have an hour on Monday to trade. You work, you have a business, you have other commitments, you've got an hour to trade. So that's not really going to work for you. You have to trade. So how do you do that? You might put in times, okay, well, I only trade half size and stuff. But let's say you have to trade anyway. You can practice your emotional response. And the way you do this, and I've shared this before in kind of other, I think, videos and stuff, but I know there's some new people here, so I will share it now very quickly, is you visualize how you want to respond. You close your eyes, you imagine yourself in that situation, you imagine yourself feeling annoyed, and then you imagine your reaction. Because it's not normally the three losers that's the problem. It's the subsequent seven where you trade on tilt and absolutely decimate your account that's the issue. You can deal with three losers. Maybe you need to walk away. And so you practice. I'm frustrated, annoyed. Oh God, I can't believe I've hit my daily loss limit in the first 15 minutes of the month. I wanted Monday to be great. Oh, I'm frustrated. Fine. Step back, let it dissipate, and practice what you want to do, which is walk away or whatever action you want to do. So practicing your response mentally is sometimes a way to avoid some of these issues. Okay, so the last thing is persistence. And I guess this goes without saying, but successful traders don't get to where they are by giving up. And I appreciate that it's hard. God damn, it's hard, right? It's a tough business. But, if you have the mantra of saying, you know what, I'm just going to stick to this. It takes as long as it takes. I'm just going to stick to this. I'm just going to keep making a little bit of forward progress each day. And it's actually kind of the mantra of the daily email I send out. It's like just 1% better each day, 1% better. It's not a lot, but if you can just make a one forward step, even if it's a losing day, how do I learn from that? Do I do some research? Do I look at strategy? What is it? And it's this persistence of just not giving up. And it's in everything, trading in general. Like, I'm just going to keep plowing on, just going to keep getting better. I'm just going to keep getting better. And also, let's sidetrack a moment, being very definite about what you're getting better at. Too many traders are just judging their performance on P&L. I get it, right? Trading's about profit and loss, and it's how everything's judged. But actually, when you're developing trading and you're trying to get things all together, it's better to judge your performance on how am I holding trades? How's my entries? I want to get really good at my entries the next couple of weeks. I want to get better at stop placement and really identifying those areas that need the work. Because when you work on one thing and you focus your energy on one thing and that improves, then you have the ability to go to the next thing and the next thing and the next thing. When you're trying to do so many things at once, I'm trying to get a good entry, trying to get my stop right, I'm trying to size up, I'm trying to hold trades, I'm trying to do this, I'm trying to keep my emotions in check. It's so much to do, it's almost impossible. It's the focus of saying, hey, I'm going to be there in a few months' time, and to get there and to get to here, 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 here. Right. Focus on that. So not giving up a new strategy. And what I mean by a new strategy is this: is let's say you've researched a new strategy, you've done some review, you kind of looked at you looked at the market, you say, hey, I think there's a decent strategy here, like buying this pullback after breakout to a level or whatever it may be. Okay. What are the rules for this? And you might come up with some rules. Now, a lot of traders do this, or they see a strategy online, or they read about a strategy, or hear about a strategy, whatever it is, start to deploy it and go, it's not working. I'm not going to do it. What's next? And the next shiny object gets their attention. Successful traders don't do that. They say, right, I'm going to run this strategy for a period of time, and I'm going to see the performance. I'm going to give it a decent period of time, a small size, fine. They don't want to do any damage to their account, but I'm going to allocate some capital to this. I'm going to run with a new strategy and see how it performs. And then they review. They don't just give up based on short-term results. Imagine if you were, I don't know, a department store selling a new line, right? You wouldn't suddenly just go, okay, well, this I'm going to sell these new jeans, the designer jeans. How many do we sell on day one? Oh, when he sold a pair, I'll get rid of them. You're not going to do that, right? You're going to give it a period of time, and then you're going to make a judgment. So the same with you running your trading business. Run a new strategy for a while, deploy it, see what the performance is like, and then decide on whether to do something with it. So it's the persistence of sticking to something for a period of time. Journaling. Some people do journaling and get bored of it. Just say, I'm going to stick to journaling for a month, 2 months, 3 months. Do it for a couple of days if you've not managed to do it for a while. Reviewing a new trading plan, whatever it is, it's sticking to something for a period of time and then auditing the results. And that's that persistence of eroding that rock, just chung, 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 just keep going, keep going, keep going, keep going in the right direction, not in a circle, preferably, which is why I say focus your energy on one thing. That is absolutely the trait of successful traders. Very few traders are profitable from day one. There's a few anomalies out there. A few traders I've spoken to, I'm like, wow, you got lucky, man. You just literally you hit the jackpot. You were spot on from the beginning, and it's working for you. But they'll have to go through drawdown at some point. They'll get their test. There'll be a test for them, the resilience test, the emotion test, and it might not be pleasant. And hopefully they won't draw down. Hopefully they'll just stagnate before they go to new highs in their equity curve. But we need that fortitude. We need that, and the persistence builds that. So some action points for this. If you try something new, commit to sticking to it for a period of time. It's like a muscle, right? So just like I said before, if you're trying a new strategy or a new way to journal, just say, I'm going to do this, but also add the parameter of how long you're going to do it for. I'm going to journal. I'm going to log this trade, this, and this, my maximum adverse excursion, my maximum favorable excursion, whatever it is. And I'm going to do it for 10 days. Just so that you can say, right, I did it for 10 days. Now, do I want to extend it for another 10? Or don't I? You do what you say you're going to do, then make course corrections after that. And this is the secret sauce of being able to stick to something, is giving yourself a short-term time commitment to it. I'm going to stick to this strategy. I'm going to deploy this for 10 days. I'm going to make sure I just have one chunk of my position in a trading stop or whatever it is. There's loads of things you can be doing. And you run it for a period. Don't just add that, add a time parameter onto it. And then at the end of that, you go, right, I did it. I stuck to it. I did what I said I was going to do. Okay. And it was tough because that strategy wasn't working very well. And it felt like I wanted to quit it, but I didn't. I've now got data to look at and I can decide whether to continue it or not. For trading, some of the best and most promising traders I know of the mantra, and I've said it before, it takes as long as it takes. I'm not giving up. And there's a certain when you say that to yourself, there's a certain confidence. Your shoulders drop a little bit. You get a little bit more relaxed. Many traders want it so bad. You want it so bad. You want it today. You want it this week. You want to make all that money now. You want to say, and you know what? When you just let go of it and go, I'm just going to keep making forward progress. It takes as long as it takes. I'm not giving up. course, you want it sooner rather than later. But when you just go, you know what, I'm just going to keep moving forward. And what tends to happen is you move forward, you move forward, you move forward, you make little leaps, little pullbacks. It's not like a standard linear progress. You may feel like you're not making progress for ages and ages and ages, then you'll suddenly make progress. And so having the mantra of it takes as long as it takes, I'm just not giving up, is so, so key. So whether you are kind of trying to do a funded account, whether you're running a funded account, whatever it may be, it's that mantra of just not going to give up on it. Shrug my shoulders, man. It takes as long as it takes. Who cares? I'm just going to keep moving forward, keep moving forward, keep moving forward. And not getting distracted like everyone else of, I want to make a massive amount of money right immediately. Okay, so let's have a summary here, and then we'll take some questions if you've got any. Become a specialist in a simple strategy. That's the one thing the traders do. Successful traders do. They're specialists. It's a simple strategy. They don't overcomplicate things. Think of the elevator pitch. If you're in an elevator with someone, you're a trader. What do you trade? I specialize in this. Done. Simple, one word, one sentence answer. Develop unshakable patience. Just being so, so patient that it's almost ridiculous. And building extreme work ethic. Putting your value as a trader not on your next trade or your last trade or your equity curve or your P&L. That's dangerous, by the way, because everyone goes through drawdown, everyone goes through stagnation, and you don't want to be feeling so down. It's already annoying and frustrating, and no one likes drawdown, but you don't want to be feeling worse than you should be. So build the extreme work ethic. Put your value in work. Put your value on the process. The process. Become emotionally aware of what triggers you, what doesn't trigger you. You're a discretionary trader. It's a psychological game. It's, yes, the strategy is important, but strategies tend to penny. There's so many profitable strategies out there. It's how you deploy them, how you work with them that's important. Have relentless persistence. That's the formula for winners. That's what I see from many, many successful traders. It's just these 5 things, and they're simple and they take effort, absolutely. But the results and the goal becomes it just shortens that learning curve massively when you look at it through this lens rather than the lens of what's the next winning trade? What's the next winning trade? What's the next strategy that's going to make me effective? Fine, have to do that. But when you step back a little bit and look at the bigger picture and go, well, they're doing that. They're doing that. That's a common theme here. Maybe I should deploy some of this stuff. So hopefully that's of help to you guys. I want to, while you're writing your questions in, I'll get to Q&A in a moment. I did another Sol was mentioning another webinar I did with the 5ers a while ago. You can check that out. It's called 5 Steps to Building Unwavering Trader Confidence. Another 5 steps, but 5 steps is great in an hour. And I talked about, if you're struggling with confidence and you think, well, I can't get confident in trading until I make money, and I can't make money until I have confidence. What the hell can I do? This will help you. So it's clarity, visualization. Talk about visualization again. I'm a big fan of that, if you hadn't guessed. Planning, aligning with your vision, and then embracing the 5 R's, which is, if you need to reset, reboost your confidence, is to reset, refocus, re-engage, and repeat. So you can check that out. It's on the 5ers YouTube channel. It's also in Traders Mastermind under Learn, I think, and then webinars. And while you're there, you can sign up for my daily email if you like. If you'd like to, it helps you, build the discipline, just gets your mind right. I had send it out every morning about 7:30 a.m. Completely free, of course. Okay. Oh, well, final thing as we get to questions, I've got something I'd like to give you as a discipline tracker. I had it made up for Google Sheets, and it helped you do the things that I've covered today. So you can put in the habits you want to deploy, and then every day you can check off as you go and try and kind of beat last month. And so you can put, hey, I want to run my trade. I want to make sure I'm checking the economic calendar. I want to make sure I'm journaling. So you add the habits in there, and then you progress. You just tick off each trading day you go. If you miss a day, fine. You just try and get better each month. You can download that for free. That's my gift to you. Go to tradersmastermind.com. If you go to, it's in the nav bar somewhere on the top there, and you can download it. Just it basically makes a copy of it to your Google account, which you can create for your Google account. It's fine, and then you can use that to help you move forward. Okay. Let me look at the Q&A. We've got a few moments. I think that's good timing. Some questions. All right. Let's have a look here. Okay. Gabri says, I'm fairly new, trading for about 18 months. I don't recall how the markets were around this time last year and what to expect. Could you guys have us cover some pointers on this? Please. Generally, again, generally, who knows what's going to happen? Markets are very, very different. There's always different participants, and inflation's a big thing, and interest rates, or whatever it may be. Whenever we come into this sort of period, it tends to quieten down a little bit. Volatility tends to be a little bit calmer. I say that under knowing full well that yesterday in the equities market was very different. That's trading for you. But generally speaking, it tends to be a little bit quieter. People are on holiday. People who are making big decisions about how to allocate capital, which are the people who move the markets, tend to not be around, right? And so that means that generally speaking, it's quieter. There's also the adage of the Santa rally, which we have in equities, which is something you could Google and maybe research. But in summary, generally quieter of this period. Second week of Jan kicks back into gear a bit. Again, generally, you never know in markets. I've sometimes seen Christmas Eve's half days where it's just gone wild. Unlikely, but it can happen. Okay, Dennis Boff. I already have a question. How do I fight greed? In 1 week this month, the greed catches me. I made some profit in the first days, and someone from inside me says, you can do more. That comes back to that slide, Dennis, about knowing what triggers you, pal. If you have a good couple of days or whatever it may be, and a little voice is saying, whoa, you're trading God. Whoa, off you go, Dennis. Nothing can stop you. Then, you need to be aware of that. And so there's no quick fix. I wish I could give you a quick fix. There isn't. You're going to have to say, listen, that triggers me and makes me greedy. Let me go back to the process. What's my process? How do I trade? How do I kind of deploy capital? What's the right trades that I did that made me that money before? I need to just keep doing those. It's a fine line, right? As you get better at trading, you don't want to back off when you're doing well, because when you're doing well and things are going in your favor and it's the right conditions, you want to get your throttle down. But that's something to do when you're more advanced. And I don't know how long you've been trading, Dennis, but you want to build confidence in your first kind of year or so of trading, 2 years, whatever it may be. And so maybe taking a break, maybe going, hey, I made some money. Let me let that marinate in my body and go, oh, you know what? I feel good. I feel good. I feel like good. Okay. And then reset. There's something to resets and recalibrates you back to imagine you're back at zero. And there's something, actually, there was a trader, his name is Don Miller, and you can go and check out his blog. And he did 1.6, I think, 1.6 million, I think it was. And he kind of blogged, he documented his process. But the reason I mentioned him is because he would always trade better when his equity curve was in drawdown. So he would imagine that every day he started with his equity curve in drawdown. He had this little kind of scribbled drawing, and that might be a little hack for you. You go, oh, you know what? I trade better when my back's against the wall. I'm very strict about my process, very strict about where I'm going to allocate capital and my strategies and my stops, my risk management. Okay, I need to imagine that I'm in drawdown because I do very well at recovering from drawdown, but I don't do very well at kind of pushing the equity curve to new highs. So I hope that helps, Dennis. Okay, I should be a bit quick with these, shouldn't I? Shreyas, sorry I butchered your name. How can I overcome the challenges of hesitating to execute trades during the evaluation stage? I'm in bootcamp 100K, challenge phase 2, and prevent impulsively taking random trades when feeling overexcited. Common issue. The good news is you crack it. This is a big, big hurdle. You need to anticipate, not react. That should be your mantra. And then what does that mean is, okay, I want to anticipate where you want to do business. Is there a key level you want to get involved in? So it's a filter, right? If it gets this level and I see this ignition bar or I see this reversal pattern, I will take it. And it's just time will help you again, pal. Say, right, I just need to wait. There's very few trades that need to be taken right now. There's very few trades you can't anticipate. Okay, occasionally there is some stuff, but if you find yourself impulsively taking stuff, then just have a rule. Hey, I wait 5 minutes before, if I feel it as a trade, hit my timer 5 minutes and just get used to that. And there's going to be a little voice goes, you're going to miss stuff, you're going to miss this and that. Fine. I'll find an opportunity. If it gets this level and does this, I want to take the trade. Just avoid that kind of reactiveness and be more considered in planning and act more professional in things. It's difficult, but that will help you loads. Because listen, you're sort of sitting there waiting, and 1 minute candle spikes up, you get seduced by that, you get into a trade. It doesn't serve you. That's not an edge. You need to work to your edge. That fly just buzzing past me. Brooke, have you noticed that once we find a simple strategy based on statistics, I think, which are working beautifully, traders get anxious? It might, yeah. Oh, I didn't really repeat. Maybe the question for everybody here is, have you noticed that once we find a simple strategy based on statistics, which is working beautifully, traders get anxious that it might stop working? And Brooke, the new bad news is that it will. Strategies come and go. There are strategies that deployed and were very, very profitable for me years ago, which were absolutely useless now. Doesn't mean they won't come back into the rhythm. The market's changed. It might be, but at some point, I hope to dust those back off and redeploy them. You have to be constantly looking for new strategies. And one of the things that impacted me a lot was, a strategy was working very, very well. It stopped working. I kind of looked around and went, "Now what? I've got nothing else. That's it. Is that me done as a trader? Is that it? Am I done?" And ever since then, I kind of realized that I always have to be looking for new strategies. So, quick answer to this is, just make sure that you're constantly looking out for new strategies. So, you've got strategies you're deploying, great, but you're also working on new strategies as well. And that helps get rid of the anxiousness or the anxiety, better word, of it not working. Okay, but I've got others that are bubbling under that I could kind of put some more effort into. Shreyas says, how can I overcome the challenge of holding on to profitable trades while resisting the urge to exit prematurely? And conversely, how can they discipline themselves to cut losses and exit losing trades when the emotional inclination maybe to hold on? It's just a muscle. You've just got to. And here's a tactical thing for you, Shreyas. And I have a couple of questions that are on a similar thread. Just say to yourself this week, right? I will cut my losses at my stop point. I will not move my stop. I will not deviate from my stop. That is my only job this week. I'm not here to make money. I'm not here to be a hero. I'm here to just get better at that one thing. And that is to not ever move or deviate from my stop loss. My risk is absolutely sacred. I must not cross it. And just do that for a week and then do it for two. And then that becomes a habit. And then you go, right, now I need to hold on to profitable trades. And that also comes down to planning. If you don't know where you're going to come out, you can't beat yourself up for coming out too early. If you've got a level, you're like, I'm not coming out until I get 2R, it's 2R or nothing, then fine. Again, it's being very, very strict and structured for a short period of time to get better at that one thing. George says, does meditation help in trading? Do you know what, George? I don't meditate, right? I do kind of do some mindfulness and stuff. If I've been in the gym or I go my cold plunge or sauna, or I kind of, I do perhaps meditate, but not traditionally. But I do know traders who swear by it. Helps them really relax, helps them become more focused in tune with who they are. So I think explore it and see if it's right for you. For me personally, I've tried it a few times, I just can't get into it. But I do feel that other things I do help me be a bit more mindful and a bit more kind of thought. They're not necessarily meditation, but it does allow the subconscious to process some of the market action that's gone on. Anonymous has put, I don't have confidence and I close a winning trade early and lack the confidence that will hit TP when it's going to hit SL. I leave it until close SL. What other checklists you suggest me to follow? And thank you for your time. Similar suggestion, I think, to the previous question is just train yourself to do just that and say, right, for a week, I will hold every trade to TP. And in fact, come up with a checklist or use the free discipline tracker I've got. Say, this is all I'm doing this week, holding my trades to TP, defining my profit target. Right, day one. Yes, I held my trades to day two. I didn't quite this one. And say, right, what happens in week one? Well, I held 50% of them. Okay, week two, you want to hold 60. Week three, 70, until you get to the point where it becomes, you kind of harden yourself to that little voice that goes, oh, it's not going to hit TP. It's not going to hit it. It's going to lose that unrealized P&L. Detach yourself from the individual trade and just say to that voice, no, you know what? To get to where I need to go, I need to crack this and overcome this hurdle. So I'm going to stick to this trade. I'm going to hold it until TP or stop loss. And if it hits my stop, so be it. Because the rules I have is I'm going to hold this trade, and just do that for a while. And you'd be amazed that if you just focus on that for a week, how much better you'll get. Okay. Scott said, you mentioned you were mentoring. How do I get mentored? Scott, if you join Traders Mastermind, or if you kind of, you can maybe send an email to support at Traders Mastermind, and that should get to me. I've got someone who manages my inbox, but if you ask some questions there, I'm able to help you out. I don't always have time to do it. I've got a few people I'm working with for a period of time, and I try and be limited about what I do that, but I'm happy to kind of have a conversation with you, or you can get some more information on that. Artur, good old Artur, how you doing, pal? Do you ever stop trading completely during the Christmas period? Yes, I do, Artur. I think it's good to just kind of relax and just work on other things. Depending on what's going on, right? I mean, at the moment, there's a relentless bid coming into the market. There's some action. I think if it was a lot quieter, then I would have stopped now. But it's a lot of action at the moment. I think at some point you've got to go right. I'm done. And for me, it's looking like it's probably going to be um, Friday. I thought it might be early. It might be Friday for me. I think it's time to relax, time to refresh. It's also time to do some of the other stuff. Read the book, do your journaling, do some bits, review 2023, stuff like that. And I know you've mentioned this before. Don't feel guilty about stopping. If you've not got a trade on now, for example, or you feel like you want to close the books for the year, do it. You don't feel guilty about not trading. I know you've mentioned. I know Artur from a member in Trades Mastermind, but you do feel comfortable with stopping and going. You know what? I'm done. I'm just done. That's fine by me. I'll come back for 2024. Anonymous, the average year for a trader to be a consistent, profitable trader. How long it takes, I guess, is the question there. 2 years, 3 years, 4 years, 5. It really does depend. I actually think, if you're really focused and you work on your mindset, you work on your strategies, and you've got good emotional control, you kind of really put a lot of effort in, you can shortcut this game. You really can. But sometimes you uncover some things in your personality that take a while to unpick. And so that can be challenging. But I really think that, the right person, the right guidance, the right stuff can do it in quite a short period of time. But we tend to get shiny object syndrome and go down rabbit holes that don't work, or go back in that. And if you're doing it yourself, it's quite easy to sort of spend 6 months going down a rabbit hole that's not effective for you, and having to come back and undo that, and then you get some bad habits. But if you've kind of got some support from peers and you've got, you know where you're headed, then I think you can shortcut that massively. Lucas has put, have we got enough time here? I hope so. Lucas put, is it possible to trade full time from funded accounts like with the 5ers and treat this like a business/job? What is needed to succeed? Is it even possible to live from one funded account, pay bills, and grow the other accounts and enjoy life? That is my goal. I hope this is possible. Lucas, anything is possible. Anything is possible. One thing I will say, that if you are relying on your trading as a sole income, you need to be aware that you will have periods of stagnation. You will have periods of drawdown. You will have periods where things aren't going the way that you want them to go. And so if that's a route you decide to take, be very mindful that adds a lot of pressure. A lot of traders, and that trader who I kind of screenshotted some of his stuff, he has a full-time job as well as trading. So he's managing to do both. And the reason that he still has that job is that, okay, he doesn't have to worry. If he didn't take a trade all month, if you're trading full time and you've got a mortgage payment, you've got this payment, whatever, you've got bills to pay, you then end up over trading if you're not careful. Now, one way to do it is to get a big win, stick some away, and go, right, I've got my living expenses covered for 5 years, 6 years, whatever it is. Now trade. That's one way of doing it. But generally speaking, you don't want to add that pressure to you right away. If you add that pressure to you right away, it's a burden. I don't know how old you are. I mean, if you're 20 something and you only got like when I was 20 something, all I cared about was being able to buy a Domino's pizza and put in fuel in my motorbike. So it's different, right? When you're a bit older and you've got some responsibilities and people relying on you, then it becomes an extra challenge. So anything's possible, but just be aware. And by the way, don't fear working at the same time. Loads of traders are running businesses. They are working and they're trading and they're building this pot up. They're kind of making money. They're building the pot up and they're not having to pull any money out. Because one of the downsides as well is, sort of last point on this is, let's say you make 80 grand and you take money out, then you're not really growing your pot. So you've got to kind of be smart about it and think long term. Like, okay, that's where I want to head. You want to head to a point where you do this as a business and a job. Absolutely. But you might have to take some baby steps first, prove that you can build some capital, extract some capital from your funded account so that you kind of got some of your bills covered. And then maybe you do less work, maybe you do more trading, you can play the game. But make sure, you don't put yourself in a position that makes it very difficult to trade. Ali said the tracker will be available for free on the website. Yes, Ali, if you go to tradersmastermind.com, I want to say /discipline-tracker, but better if you just go on the top right, and I think it's tools or something. I should know this, right? I should have had this prepared, but it's there. You can just click it and you can be away. Am I over time, Sol?
We're good. I think we can address one more question and then wrap up.
Okay. Let's find a good one here.
Because of course, on the recording, we'll leave all the contact details from, for Mark, so you can reach out to him and, have a direct communication with him.
Let me do two quick, because I've got a quick one here. Ian says, don't have confidence in my trading plan. Any advice? Go and watch the webinar I did with 5ers on their YouTube channel about getting confidence. That will really help, Ian. How can I manage the psychological thing of getting less trade? I don't know what, that could mean a couple of things. We've got one more. How about this? Can you talk about trading goals? How one can measure their profit or make decisions for withdrawal over a series of trades? You know what? Trading goals, I think it's important to be process focused. And it's something that Sol mentioned when we had the conversation on our podcast. If you can be very, very mindful about your process, very mindful about that and using that as a goal, the P&L will follow. If you're saying, I must make this sort of money, I must make this, I must do this, I must do that, then that's where you struggle. If you say, listen, I'm just going to make great trades, stick to my trading plan, stick to my risk rules, journal my trades, do that stuff, that becomes your goal. If those can become your goals, you do that 1 week, next month, you suddenly look around and you go, hey, my equity curve's looking pretty good. So flip your focus from kind of financial goals to actually, hey, I want to just process focused. All right. Thank you for your questions, guys.
Mark, that was a masterpiece. It really was. Thank you very much. And of course, this being recorded, we will upload this to our YouTube channel next week, and we'll include Mark's link so you can reach out to him, get all the free resources he's offering. And thank you guys for coming. Thanks guys for staying. Thank you, Mark, for making the time and sharing with us all your knowledge. Until next time, I guess.
Been a pleasure, Sol. Thank you so much. And thank you, traders, for joining us live. It's always better when there's an audience and we kind of can interact with each other. So I appreciate you and get your risk managed.
Fantastic. Thank you, guys, and happy holidays.